Hello everybody, Andy from ASAP Trading here. Today we're gonna have a big hard look at the precious metals market and gold in particular. It all started with my previous video analysis when I was speculating on this kind of price action on the DXY ticker. So this kind of price action can result in a very big move to the upside in the gold market. So checking up the spot prices, we can quickly notice that we had some run up. We was consolidating here more than a year. Initially, it was looking like a flag, broke to the upside. We're gonna analyze this breakout, tested it, and since then, the price action here is very impressive. Very impressive. We have 1, 2, 3 pin bars in a row with big wicks to the downside. I consider this one as well, even if my indicator just filtered it as a noise. The gold spot price chart doesn't illustrate volume, so for that purpose I'm gonna use the GLD. All the precious metals funds are gonna say that this is paper gold and this is fake gold and this is fool's gold, and I totally agree with them. But the volume on the biggest ETF on gold gives me a clue what's going on. So on a weekly chart, we can see this flag. I've highlighted a level of resistance. We can see this breakout here, which occurred on a neutral delta. This is why it didn't last too long. Since we starting rolling down, we started generating an accumulation delta, which is pretty solid. The question is now if the price line on a weekly is gonna go to the zero line or if it's gonna hang in the 50 zone. Taking those 3 pin bars in account, taking these the signals of a bottom in account, particularly speaking about this signal, that's a synthetic VIX on based on Williams research, based on Larry Williams formula. It's signal the bottom here, another one here, and the biggest one here. Based on the MACD reading that is hanging just below the zero line, and if we're gonna have a crossover here, we're gonna go through the zero line and we're gonna confirm to buying signals. I think weekly looks bullish. Again, the single danger is if the blue line goes to the zero level. On the daily, we have another interpretation of this action, but it's worth mentioning. It's worth mentioning that on a weekly, if we switch to the line chart, we have a good level of resistance here, and since we broke out and we come back and tested the flag's trend line, we are forming a falling wedge here. So the only risk is that we can slowly roll over to the downside. On a daily, I illustrated this as a widening range, not as a flag. I highlighted the zone of resistance right there. As we started accumulating delta, I was thinking might be at this point. I was thinking might be in this is head and shoulders, and it will be penetrated to the upside. But it didn't happen. The MACD readings are very impressive. We just confirmed on Friday a crossover, which gives us 1 to a 3 point divergence. The MACD is structured in a pretty symmetric triangle. I'm gonna put horizontal line here to compare the angle of attack. But it doesn't give me too much information because the both angles are very symmetrical. The action is below zero line but near it, so it can break through. So bottom line is that if someone was to take a long position right here and put a stop at one of these pin bars or the absolute bottom, putting a stop under any pin bar is going to be considered an aggressive move. Putting a stop under the bottom is going to be considered a more conservative move, but there is based on a price line on a smart money readings, there is some risk that we can put a double bottom in before we are going out. Me personally, I'll prefer to get in as aggressive as I can with a stop under this pin bar, with a stop at this at this line, because right now we've got a crossover near the support and resistance band on the daily. We've got some accumulation going for a while on both time frames, and I think gold is ready and doesn't need another bottom. But again, I highlighted the risks. So that was everything. Thank you for watching.